Welcome back to the Wallet Monkey channel, my friends. In this video, we are going to talk about and show you all of the pre-qualified offers that we have bundled together in one specific page that you can find over on walletmonkey.com right now. If you just go to blog.walletmonkey.com, finding pre-qualified offers, just making sure I got it right, and that'll bring you to this page right here. Check this out. So it's well over 80 pre-qualified offers. What does that mean? That means that you can go and see the likelihood of getting approved on a specific credit card or with a specific bank without it actually hard pulling your credit. That means it'll be called a soft pull, which means it won't show up as a hard inquiry on your credit card report. Now, there's all kinds of tricks and things that we can do, so I don't want to go super deep into this because we have other videos on the channel covering this, but it's 2025 and I want to talk about some of the things that have changed and how I'd be navigating this myself. So let's dive in, yeah? First, we've got the big banks. So this is American Express, Bank of America, your primary national, if not international banks here. Most of these are live. Chase is not live right now, but what's weird about Chase is the link is right. So just keep coming back and checking out this link because it goes up and down pretty frequently actually. And right now they're just doing site updates when I last checked this. So it might actually be live, but they're updating the site. So I don't know. Citibank, Discover, Capital One, Bank of America even, these are all pretty consistently open now for like the last 3-4 years. They don't really go away. Chase goes up and down, and so does HSBC. HSBC goes up and down. And then GM Marcus right now, I think all of their pre-quals are down because Goldman Sachs rather is trying to get rid of the GM cards. So the GM card and the Apple card, they're trying to get rid of. So I'm not really sure what link to use. I'm sure some of the sites are still live. Like if you go to apply for the Apple credit card, which is the same backer, the same underwriter, you can go through that, and both of those are soft pull up until the end, up until you accept the offer. And if you wanted to just make sure that this is true, you could freeze your bureau up until you accept the offer if you like the offer, and you'd get a similar effect. So you should be just fine there with those. But the GM Marcus site pages that I was all pulling up are all down. So I don't even know if we have the correct link for that. And then Wells Fargo here, you can see it just at the bottom, and Wells Fargo is usually open as well on their pre-calls too. So not much has changed here. If you did want to do pre-qualifications and ensure that you're not going to get a hard pull at all, you would just freeze your CRA, your credit reporting agency or bureau, right? Now, also too, if you know which credit bureau these banks are going to pull, you could freeze the other two that aren't going to be pulled. Like for example, with American Express, the very first card that you get with them is going to be an Experian hard pull and most likely a TransUnion hard pull. This is newer, but it seems pretty consistent across the boards now. So you could just freeze your Equifax. Now, if you're a returning customer, you're already got open credit line accounts through your name or through your business, everything else after that point is a soft pull through American Express, so you don't really have to worry about it, okay? So you could leave the bureaus open and you would be just fine there. So that's an example. Bank of America, they're all over the place with TransUnion, some Experian stuff. So again, based on the card, which you can check out the master credit card lender list, which is also still on the site, still free, 100% to check out. And you could then figure out your game plan based around that. Let's jump into credit unions now. So credit unions, the beautiful thing about them is a lot of credit unions, after you're in there for 90 days, 180 days, they will start serving you up offers. They will start serving you up either 100% soft pull offers, or they will start giving you pre-approved offers. Pre-approved and pre-qualified are completely different. Pre-approved means that you're pre-approved. So they're gonna give you like APR interest rates. They're going to give you sometimes limits. They're going to give you very specifics about this card that you are pre-approved for. So the likelihood of a pre-approval offer going through, very high. Like DCU is a great example of that. BECU does this, but there's so many others, Wings and similar banks like that that we've brought up over the last couple of years that will all start to kind of churn and give you pre-qualified offers. Some of them even immediately, because they'll soft pull your credit as you get membership, and they'll start serving you up offers right away. So as soon as you get approved and set up for your checking and savings account through them and you get your membership approved, a lot of times these credit unions will start serving you up pre-approved offers right away, but maximum is like 90 to 180 days. Just start to show, transactional history with them, and most credit unions will start to give you offers. They'll start to send you emails. They'll start to give you phone calls to let you know that you're approved for offers. So credit unions make it very easy for the most part to let you know when you're pre-approved, but there are some pre-qualification credit unions as well. This is a list of those. Not much has changed here. And again, over the last, I'd say 2-3 years, this list has stayed pretty consistent. Unify is one of the ones that goes up and down. Sometimes you have to already be approved for membership. Sometimes you don't. I've had people getting pre-approved and pre-qualified offers right away after they get membership with Unify, but that seems to change. Pivoting now into Fintechs. Fintechs would be like sometimes they're making you link up your bank account and they're not using traditional sources to approve you. That's what we consider a fintech for the most part. And we've got your Apple Card, Deserve. The CrowdFit card is actually gone. I'll probably remove that and have that gone by the time you watch this video because there's no point in having it up anymore. We had a lot of data on them still and we were leaving it up just to see if maybe it would come back or somebody was gonna try and restructure it or something, but it looks like it's just donezo and gone completely, so we'll get rid of that. But that was a Deserve co-brand. Essentially, Deserve was the underwriter to that, which Deserve and Celtic Bank are a lot of the underwriters that you're gonna notice under Fintechs, as well as WebBank, right? So anyway, moving on. M1 Finance, Klarna is under this, Tomo, Gemini. Gemini is actually a really good credit card, and it's probably, out of this list, one of the few that I would say is actually worth getting. The Apple Card, unless you're doing a ton of Apple purchases to get that 3% back, I don't know if that's even worth it. Also too, it does help with utilization because that card you can work up pretty good to high limits, 30,000 plus, I've heard. And so that card is good to hide utilization, I think, or if you're gonna actually be using that, I think that's a good card. But yeah, if you're just for an everyday card, I think the Gemini crypto card is really great. They'll give you the rewards in cryptocurrency that you get to pick, Bitcoin, ETH, whatever you want, Solana, and they don't really play games. Haven't really noticed that they cut limits or fluctuate. If your scores drop 50, go up 50, they don't really play games with you in that sense. So I really, really like that card. Most users in the community are happy with it. M1 Finance card, we don't have a lot of experience with. The Rocket card, that just seems like it's another piece of the ecosystem with Rocket Mortgage. And I have zero intel on Ness. Okay, so moving along into credit rebuilding pre-qualification cards. So when you're rebuilding credit, what you want more than anything is to just be accepted. You want to get approvals, right? And a lot of times we're willing to take approvals on cards that don't even make sense, man. Like, we should not be getting these cards. We should be doing the things that we know are gonna work to build up our history, our transactional history, and our experience with these banks to then get great bank cards, great limits, great usable credit cards that are not just gonna be like $1,000 balance limits or $500 limits. These are gonna be actual cards, like I said, we could use. This whole list is just like, man, don't even waste your time. Prosper goes up to 3,000, Mission Lane goes up to 5,000, but all of these cards for the most part have high interest rates. They've got yearly fees, they've got every kind of fee that you can squeeze into there to make the card completely useless. Many of these you think, man, but what if I got the 3K? Jay, what about that? What if I got to 5K? Most of these, you'll start with like $500, $200 limits. And we've got plenty of videos now outlining that as well on the channel of people who went out and got way too many credit rebuilding cards and just completely hosed themselves and still had to wait, because after that, your average age of account is toasted. So then you're gonna have to rebuild your average age of account. And you're gonna have to wait 1, 2, 3 years for that to build up. So this is really taking you out of the game for a long time. So I would just caution you and urge you to really think it through before you go and start to pull the trigger on credit rebuilding cards specifically. Even Capital One is in this list. Capital One cards, a lot of them are not worth it outside the Venture X, which there is a specific pre-qualification just for the Venture X card. And then everything else Capital One, all the rebuilders and everything for good and great credit is here, but the Capital One Venture X is all by itself. So this is the last one, store credit card. So store credit cards are another thing that I would caution you about getting, only because there's really two big backers, and it is Comenity and Synchrony, or Synchrony, however you want to pronounce it. And both of those two will cut limits for no reason whatsoever. You could have perfect history with them, always paying on time. You got fat limits with them. I've seen $30,000, $40,000 cards. Heck, even the Lowe's card, the Lowe's store card will go up to $90,000. I saw somebody with a $90,000 limit on this card get cut. They'll call in a loan on any day of the week, I don't even know why. And we shot 3 videos now on the channel outlining this about different arbitration clauses and everything else that you're actually agreeing to when you're signing up for these cards. Synchrony, Comenity, I would just say avoid them at all costs. I mean, unless you're doing sizable amount of shopping at that store and the 3 to 5% that they're gonna give you is actually gonna be worth it, and you're willing to wake up one day and possibly lose the card, outside of that, I would say stay away. There are others though, like look at this. We've got some backed by Wells Fargo, we've got some Capital One cards. Citibank is still a mid-sized player in this. More banks, I think, are gonna start getting into it. I just think it's a mess, and that's why you don't see a lot of big operations, big banks, national banks getting involved, is because I think it's a lot harder than people realize to manage this. And also too, I don't think a lot of people that are applying are in the good to great credit category. I think they're mostly in the rebuilding category. So WebBank has also got some too. Here's all the pre-quals for that. So there's actually quite a bit in here. I mean, a lot of your favorites like Wayfair, Home Depot, Lowe's is in here too. So the Lowe's and Home Depot card are the only two cards that I like in this whole category. Let me just double check, maybe the Walmart. Yeah, and it's because, you know, these cards, you can work them up to high limits. Like I said, $90,000 limit, even though it did get closed down, like that was a great card, they needed it. They were in the construction field, I guess, doing remodels and things for their own rentals. But yeah, that's the only downside, is that you could wake up one day and it's gone. And that $90,000 trade line, like you can use a lot of that. And that will help tremendously, because when you use your card at checkout for Home Depot and Lowe's, a lot of times they'll give you even more exclusive discounts or exclusive cash back, or they'll run periods of time where if you've got these cards, then you'll get something else additional for free. So it really does make it a great card. IKEA is similar in that sense. Like they've got specific designated times throughout the year for card holders to get even more benefits. So if you stack that during that same time, then that really does make sense. That really does add up and make them really, really great cards and really, really great cashback, you know, bonus type structures. But yeah, it's a big question mark. So anyways, I think we've harped enough on that. But yeah, store credit cards, that basically is just a card that's locked down for that very specific store that, you know, that it is. So that's a, you know, you can only use it at Kohl's, you can only use it at Walmart, you can only use it for Toyota vehicles, Lexus vehicles, you know, et cetera, et cetera. So anyways, that's what we've got for pre-qualification links for you for 2025. Let me know in the comment section if we're missing any. This is the page. I'll also link this in the comments below. And here we go. Let's have a successful year, my friends. Thank you so much for watching. While you're here on the channel, watch some other videos. It really does help. If you want to help us with the algorithms and all that goofy stuff, then comment below, like the video, you know, share it with a friend, something like that. It really does go a lot further than you realize. So thank you so much for tuning in, and we'll catch you in the next one.